Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, morning.
Hi, morning. Folks. Good morning. A bit of an AI scare all over again. It's one day up, one day down in the US markets, right? That's how it's playing out.
Well, that's right. And we haven't been part of that AI party. So, I don't know. Maybe it's time. India's time to outperform is here. And I think the market's actually been looking quite good, right? Not too bad. Hopes of that trade deal coming about. Yesterday's close was pretty good. I guess November is when we have those fresh all-time highs.
You know, this is not new. We've been talking about this lack of AI here.
Yeah.
For months now we've been talking. And, you know, now people have started to say, as I think yesterday, Amish and others from conferences that we've spoken to, that if this AI trade fades, we will start to get some money. So there's a new term.
The anti-AI trade.
AI trade.
And we are the anti-AI trade. So let's see if it really starts working or not.
Well, you know, let's just start from the beginning, right? And, you know, so yesterday morning when we started, Monday morning that is, I started with Friday's price action precisely for this reason. So Friday, US markets did not sell off or anything by close, they recovered. But we started with essentially telling you that it's looking a little wobbly for the last 4 or 5 days now, and Friday was no different. Nasdaq futures sold off 2% and then came up. S&P was up 1.5% from the lows. You know, there was a continuation of that wobble yesterday, last night as well. So equities in the US off as tech stocks struggled. Nasdaq was down 0.8, Nvidia was down 2, and of course Nvidia reports numbers later tomorrow, and we'll react to it on Thursday morning depending on what the US does. Now you can blame all of this on Nvidia, but I don't think you should. But the point is, it's an important sort of, you know, conversation, analyst call, post the earnings, etc., which the market will wait and watch. There are already so many stories around Nvidia and whether that half a $1 trillion investment number will come up, whether Jensen Huang will answer that, etc., etc. So it's an important one which markets are kind of fixated on. The S&P was down 0.9% by close. It's breached its 50-day moving average. So we'll have to see if there is more pain in the near term or if we quickly stabilize, because in a day or two, if you stabilize, then this just remains, you know, what it has been, which is just a wobble. Now, the macro markets, not very much. The 10-year yield was down 2 basis points. Oil prices, which jumped up 2%, were down 0.5% or so, 64. You had some macro data, which is empire, manufacturing and construction spending, which beat expectations, so not very much there. Apart from, as we said yesterday, Walmart, Home Depot, Target numbers also this week, earnings this week, and I think they'll talk to the strength or the lack of it amongst the US consumer. And of course, with regards to India-US trade deal, which is the next trigger here, which everyone is waiting with now that the Bihar election is out of the way, you know, the White House economic advisor making that comment, we'll play that soundbite out a little bit later, very close to reaching deal with India. And we'll play out that full soundbite, but that essentially what was the crux of it. Now, once earnings season is behind us and lots of promoter, early investor block sales are back on the table. Today, just today, there's about 7,000 crores worth of blocks which are happening. Some 4 companies, and we'll get you sort of data on that. One of the 4, which is Emphasis, our colleague Vivek reported on yesterday itself. But this is, I guess, going to be a constant feature. Lots of supply away from the IPO market via these blocks, etc. as well. So just to tie in the levels, Nifty, 26,100 is the upper end of the range. We'll see if we are able to get to it. Today, of course, the start is lower. Support is 25,798. The 20-day, which has actually moved higher a little bit. So that's the trailing kind of level on the downside. Now, the Nifty Bank saw a sharp move, 0.75% gain. And I'll show that chart later. It's a rising channel. And, you know, you've tested the lower end of the channel. And logically, the upper end of the channel is 60,650 levels. So that's the target for the Nifty Bank. And support here is, you know, the 20-day moving average, which is 58,082. So these are numbers up on your screen. Gift Nifty I think, as I said, indicating a slightly lower start, 60, 70 odd points lower. And then we will pick it up from there. Nigel has walked across and he's standing by with the F&O positioning and stats. Nigel, over to you.
Well, yesterday's close actually was quite heartening. And the last couple of trading sessions, the price action has been pretty good. Remember, today is the weekly expiry for the Nifty, so that will add an element of volatility as well. But as of now, you'd have to say that the bulls, they appear to be in control. Looking at the flows yesterday, well, the FIs, they turned buyers. So yesterday, both you had the FIs as well as the DIs on the same side. Institutions were net buyers in yesterday's trading session. What about the FIs? Well, on the index futures, they went ahead and they added longs as well as shorts, around 2,000 contracts apiece. This market is still net short with close to around 88% of the positioning on the short side and 1.6 lakh contracts on the short side itself. Besides the futures data, well, the heartening factor was yesterday there was good amount of put writing as well. And that's telling you that the base of the market is moving up gradually. First, we're talking about 25,000, then 25,700. Just in the near term, the 25,500, 25,700 mark appears to be a bit of a support zone. And you should get some options data that comes up for you on the screen as well. The 26,050 call, fair bit of open interest built up, the premium at around 50 rupees. And on the downside, you have this 25,900 put, massive open interest built up, and the premium that came down to close to around 30 rupees or thereabouts. So just punching in these and looking at the technical levels as well. In terms of a range you're looking at, well, on the downside, support comes in at this 25,800, 25,850. Why do I say that? Options data indicates that, and even the 20 DMA is at around the 25,800 mark. Resistance, though, comes in at around 26,100. Going by the options data, because the premium on the 2650 call was at around 50 rupees or thereabouts. The Nifty Bank, I've been making this point for the last many trading sessions. If the markets need to move up, the Nifty Bank needs to lead its way, and that's precisely what it's been doing. It's trading well above those averages, and it's in a bit of a breakout phase. If you want to look at a reference point, the 20 DMA, which is at around that 58,000 odd mark. There are plenty of blocks that will be taking place with promoter selling, PE selling as well. But rate gain is one of those few counters where I saw that, the stock has gained a good amount in the last 1 month or so. They came out with fairly good numbers, did some inorganic growth. And surprise, surprise, the promoter entity going in there and bought close to around 1.5 lakh shares on Friday, which was reported yesterday. So that's a good sign, right? When a promoter comes in there and chips in this entire market where you're seeing a lot of supply, a mild promoter buy, I'll keep an eye out on rate gain as well.
Okay, all right. Nigel, actually, since we're talking trade, and Prashant, you alluded to what Kevin Hesed said yesterday. In that context, should mention that our trade numbers came yesterday, and they definitely are showing that it's a wobbly picture. Nothing new for the market. It's pretty normal. We would expect. Trade deficit, the India trade deficit has gone up by $10 billion in October. That's one, because gold imports have shot through the roof. Obviously, the festive season, Diwali, so on and so forth. And the second, obviously, exports have contracted. Merchandise exports are down almost 12% in October. And areas like textiles and ready-made garments, there's contraction there, about 8%. So obviously, this is a pending issue for the real economy, for our export growth. In fact, let's listen into what Kevin Hesed had to say. He did give some indication that, they also want a deal to be done. But is there clarity? Are timelines in place? Well, right now, it's anyone's guess. Take a look.
What's going on with India? Just as an aside, in terms of a trade deal, we've been so close so many times. Were we ever close?
Yeah, we were for sure very close. I've spoken to the ambassador, and we've had visits, and I think that it's a complicated situation because of the interaction between what India does with Russia and what India does with us. And so I think we're still quite hopeful, but it got pretty complicated because there are a lot of different variables in the India-American relationship. But they're good friends, and we're hoping we can work it out soon.
Okay, so that trade deal needs to get done. In October, our trade deficit stands at $42 billion. That's a big number. Anyhow, for the time being, let's move on to the equity call that we're getting for the morning. We actually have two calls today. One is coming from Mahesh Nadurkar of Jefferies, who says that the September quarter earnings showed a sequential uptick in growth after 4 quarters of decline, with the early festive season driving revenue growth to a 10-quarter high. Sequential improvement in growth was seen in most sectors, with lending financials also recovering after 2 quarters of earnings decline. He says that the sustainability of the GST-driven consumption uptick remains key for stronger earnings trajectory. MSCI India's earnings growth for FY26 now stands at 10%. Meanwhile, Rhythm Desai of Morgan Stanley says that the policy has pivoted, supporting a strong recovery in nominal growth, which should take earnings growth out of the mid-cycle slowdown experienced over the past 12 months. Relative valuations are consistent with improved forward performance. He says FPI exposure remains the lightest in history, and the structural domestic bid is intact. He adds India's long-term story has been reinforced with a slew of reforms. Hence, they believe that Indian equities are all set to reverse their worst performance relative to EMs in 31 calendar years. So, yeah, that's the extent of the India underperformance. But Rhythm says it's about to reverse.
Okay, well, lots of opinion, right, which is coming through. We'll get you more along with that one. Let me just quickly run you through what's lined up here in terms of interactions on the show. 8:30, you'll hear from the management of MGL as we discuss a CNG disruption amid a pipeline damage in Mumbai and the restoration timelines. 9 o'clock, we'll have Nilesh Chugh of HDFC Securities. He sheds more light on India inking a LPG import deal with the US, whether this is perhaps a precursor to a deal, but we'll talk, of course, about energy with him. Gautam Shah of Goldilocks Research will run us through technicals levels at 9:20. The management of Keynes will be joining us to discuss their numbers for the quarter. Following that, we'll have the management of Max Healthcare at 9:40 to talk about their earnings. And at 9:50, we'll be joined by Chirag Negadi and Ankur Zaveri, straight from the JM Financial India Exchange 2025. It's a conference which is kicking off, and towards the end of the program, Lata speaks with 4 veteran bankers on the costs and benefits of the next round of PSU bank consolidation. This is stellar lineup.
Okay, so lots coming up on the show, but let's get started first with a global equity conversation. We have Drew Pettit, Director, US Equity Strategy and ETF Analysis at Citi, joining in. Drew, always a pleasure having you on the show. Thanks so much for being with us. So we were just joking about it before you joined us now, right? There's the AI trade, and every other day it gets questioned and people pull some money out, but then they go running back towards AI stocks. So there's the AI trade, and then there is the anti-AI trade. And we here would like to believe that India is, probably one of the world's best anti-AI trades. So I don't know, tell us from your vantage point, what are you hearing around, and whether India is coming up more frequently in conversations, because we've underperformed. There was a local Morgan Stanley call that we just played out. So yeah, the hope is that at some point foreign investors return. Do you see that happening?
So I hate to be the bearer of bad news in the morning, but India is a market that we took down from overweight to market weight in a global context. What we're actually looking for is not necessarily the anti-AI trade. It is the AI at a better price trade, which you're starting to see in China, what you're seeing in international markets, and honestly, still in some pockets of the United States. So while AI may be questioned, I would say a little bit more frequently as of late, it's still a trade that structurally we like. We just want to get it at a better value than you get in broader indices.
Oh, no, I'm so despondent. I think I need to just walk out now, take a break. No, just kidding, Drew. But, that's important. What you're saying is obviously really important, that I think the search is not for an anti-AI trade, but for an AI trade at a better price. But that also gives a sense that, are you in the camp that then therefore this is not really a bubble, because people are taking routine profits, looking at cheaper AI trades. So therefore, global equities is not at the risk of this AI bubble breaking or bursting.
Yeah, it's funny. We actually prefer the term boom over bubble. And to your point, it is the profit taking that's healthy that doesn't really scream bubble behavior to us. When we think broadly about even some of the leveraged ETF products in the United States, you're actually seeing outflows from those products on days the market goes up. And you're really only seeing inflows when the market goes down. So when you think of that in combination, people are taking profits when they can, and they're buying on pullbacks. That doesn't scream exuberance to us. That's actually relatively rational behavior, even if that is using leverage vehicles. So again, broadly, whether it's AI or the markets, we think we're in a productivity cycle, which is structurally bullish for equities, and behavior is still rational.
Drew, hi, morning. Prashant here. So 2000, there's 20 days left to 25. You think 26 will be a constructive year for global equities overall? Here in India, while the index has not done very well, there's a bull market going on in stocks. You just have to, and it's not as if, it's 1 in 100. You got so many digital platforms which are making their way into the market, listings, and they're doing so well. Even some of the old economy stuff. So there's a bull market in stocks, but not in indices, if I can put it that way. But 26 constructive for equities overall?
Yeah, the first half, our outlooks, look, we still have upside to our first half targets across the globe. And the key to the beginning of next year is kind of what you're talking about. Some of the cyclicals in the old economy stocks kicking back in. Everyone kind of confuses market leadership with breadth. And I think your question actually gets to this point very well. There are more things that are starting to work in the background. When we look in the United States, for example, everyone always wants to talk about the mega cap names, but there are a lot of stocks that are actually beating and raising, and that's how you beat the index. So again, to your point, there is more breadth, there's more things contributing, but the major drivers of global indices are still mega cap growth stocks. But yeah, I think 2026 sets up well because some of those cyclical stocks that really haven't done anything with earnings for 3 years are actually going to see earnings inflect higher next year. So that's supportive of, again, broader risk. Whether we think leadership changes, a little bit of a different story.
All right, Dhruv, final couple of questions before we let you go. The last rate cut that we got from the Fed was viewed as a hawkish one. Now there are doubts whether or not we're going to get another rate cut in December. I think the odds have come down from 90% to around 50% as looking at the Fed futures out there. What are you penciling in terms of Fed rate action? And what would make you change your stance in the Indian markets? As you said, you'll have put it down to market weight from overweight earlier. What's it? Valuation concern, is it?
So on the Fed, house view is we still expect to cut in December. How we're playing this through to our equity view, we do expect some cuts. We do expect a little bit of weakness in economic data, but not full out recessionary types of data. So again, those are more, I would call it maybe insurance cuts in a sense, or just kind of tweaking in refining monetary policy. That again is good for broader action in equity markets. When it comes to India, really the story was earnings were good, fundamentals were good, valuations had kind of run away, not necessarily run away from us, but kind of reflected that good story. Right now, with more of the cyclical side of EM kicking in, and again, some of the AI tail in China as well working, that earnings growth premium isn't as strong as it was over the rest of EM, and the valuation kind of reflects the better earnings growth in India. So to us, it's kind of a combination of the two. We want to see premium earnings growth, but we don't necessarily want to see that fully reflected in valuations. So two-prong on your question there. It's keep giving me strong growth, but just give me a better entry point for the Indian market on a valuation basis.
We wish. They say, right, if wishes were horses and so on and so forth. But yeah, that's been the issue with India. Take your point completely. Valuations, maybe earnings will catch up and surprise on the upside. Thank you, Drew, so much for being with us. Great conversation as always. You have a good evening out there. We'll take a break, come back on the other side, and there's lots lined up. Our list of top stocks to watch, and we have plenty of names on the list as always. So here is, what it's looking like. Okay, we'll come back with that list in just a jiffy. Welcome back. Let's quickly glance across Asia. And as you'd imagine, the color is fairly red across most Asian screens because of that weak handover from Wall Street. Some of the markets, Taiwan's down 1.3, Japan's down almost 1.8, it's almost 2%. And of course, Hong Kong, mainland China, all markets lower. Will we be the outliers? Well, that's not what the implied open is suggesting because we've had a good rally. Market came up to 26,000 just yesterday. So let's see, probably a cautious start. What about individual stocks? Let's straight away get to our team. And they're all standing by with a list of top stocks to watch. Guys, good morning. Vivek, you've had a very busy and buzzing evening tracking some potential block deals that may happen today.
Absolutely right. It's a lot of equity supply that we're expecting to see in the markets today. And yesterday, very close to market close, we had actually intimated our viewers about the fact that there could be a very large block deal that could happen in Emphasis. And along expected lines, last evening, this particular block was launched. We accessed the term sheet and along expected lines, Blackstone, that holds close to 40% stake in the company, will be exiting 9.5% stake via a block deal today. This particular trade will happen at a rate of 2,570 rupees a share, indicating a little over 4% discount to yesterday's close. The total size of the offer is in excess of 4,600 crore, and there's a 6-month lock-in on further sale of shares. Now, three other block deals that we will be tracking: Paytm, that is 197. The sellers here are Mauritius, Safe Partners, as well as Elevation Capital. 2% of the total equity, size of the block close to 1,640 crore. Floor price is at a 4% discount to yesterday's close. Here, it's just a 2-month lockup. MQR Pharma, again, a block deal over here. Bain Capital will be exiting, at almost a 7% discount to yesterday's close. 2% of the total equity, close to 500 crore of equity is expected to change hands. Remember, they held close to 6.3% stake at the end of Q2. And the last block deal that we're anticipating today is Zinka Logistics or Blackbuck. Here, the promoter entities are exiting stake, almost a 2% discount. Total offer size up to 2% of total equity, and it's just 240 crore worth of equity that has changed hands, and it's a 1-year lock-in that the promoters have for further sale of shares.
2% offer, 2% discount. Vivek, thanks very much for that. So blocks and more blocks, right? We're going to focus on autos for a bit as well. So Darshan is here with news flow. So morning.
Good morning, Prashant. So auto companies can be in focus again because now in the Gazette, the government has issued a notification. It has taken a steep hike that basically is for the vehicle certificate that for renewal, the fitness test basically it's being called. And fitness test is, what is fitness test? It basically tells you if a vehicle is safe and meets government emission norms to drive. Now, government had issued a draft on 27th of August. Now government has notified those rules and it has taken a steep hike. For heavy vehicles, the price goes up as much as rupees 25,000. And basically, it's aimed at discouraging people from using aging vehicles. So for motorcycle, if it is older than 10 years, but it's less than 15 years, charges would be just rupees 200. But if it is older than 20 years, charges will increase to rupees 2,000. For three-wheelers, if it is older than 20 years, charges will increase to 7,000, and if it is older than 10 years, charges would be again 200. For LMV also, if it is older than 20 years, charges will increase to as high as 15,000, and if it is medium goods vehicles, charges will be 20,000, and if it is heavy goods vehicles and older than 20 years, charges would be as high as 25,000. So it can be taken positively for auto companies.
Okay, all right. Thanks a lot for that, sir. Well, going back to Vivek, he's here to tell us about JSW Infra. Vivek?
Well, that's right. It's a very interesting deal that JSW Infra subsidiary has inked. So the company subsidiary JSW Overseas has entered into a share subscription and purchase agreement. Now, this is with an Omani-based company. Now, this particular company is known as Minerals Development Oman, as well as South Minerals Port Company. So what is JSW's subsidiary going to do? They're going to subscribe to 51% of total equity of a port SVB that they will be forming. This port SVB will develop, own, maintain, as well as operate close to 27 million tons per annum of capacity. That is what they're anticipating from this particular port. The total capex is at close to 3,700 crore, close to $420 million. JSW Infra currently has close to 170 million tons per annum of capacity. This particular deal will take it close to 200 million tons per annum.
Okay, all right, Vivek, got it. We'll keep it on our radar. Let's go across to Upasna. She's also watching out for a bunch of names. Upasna, good morning. Tell us more.
Good morning, Surbhi. First up, let me start with Bharti Airtel. The S&P credit rating has revised the credit rating of the company to BBB plus from BBB negative on the back of strong earnings momentum is what they've indicated. And overall, it maintains positive outlook for the company. Next up is PNB Housing Finance. India Rating has upgraded rating of companies, NCDs and bank loans to AA plus from AAA with a stable outlook. Next up is Sun Pharma. It has announced a second brand partnership with AstraZeneca to market and distribute the drug named sodium zirconium cyclosilicate in India, which is mainly used to treat hyperkalemia in adults, is what the company has said. And lastly, we are looking at DCX System as well on the back of order win. The company has received total orders worth 22.8 crores, out of which order worth 16.4 crore is for manufacture and supply of cable and wire harnesses. And also, company's wholly owned subsidiary, that is Renal Advanced Systems, has received orders worth nearly about 6 crores for manufacture and supply of printed circuit board assemblies. So all in all, we'll be keeping a track of all these stocks on our radar today.
Okay, all right. Got it, Upasana. Thank you very much for the details over there. Let's quickly recap our list of stocks to watch. The ones that have positive news flow are auto names. There's JSW Infra, Bharti Airtel, PNB Housing, Sun Pharma and DCX Systems. Stocks with negative news flow largely on back of block trades would be Memphis, Paytm, MKO Pharma, and Blackbuck. Okay, quick break on that note. When we come back on the other side, we'll have the management of MGL to talk about this big CNG disruption that's gripped the city of Mumbai. There's pipeline damage. So when is the restoration going to happen? We'll discuss that and the business in just a bit. Welcome back. Okay, so like we've been telling you, the picture across Asia is, a little tentative. We've got markets slipping and sliding. Cuts are as much as 2% in Japan. Hong Kong is down about 1%. And all of this, blame it on the AI trade. NVIDIA's numbers, by the way, come out at the end of trade on Monday. So basically, we get our NVIDIA reaction on Thursday. Still a couple of days away. But the market's getting a little nervous and taking some money off the table. So that's the big global equity headline of the morning. The implied open is suggesting that we are not going to buck this trend, at least at the start. We'll probably start 60, 70 points lower. Now it's 73 points. And you also have to take it in context with the run-up that the Indian market has had from the lows of 25,300 thereabout, all the way rallying up to 26,000. So it's been a decent run-up, and today probably is going to be a cautious start. We'll discuss this with the technical experts, as well as whether this is a day where you buy the dip or you just stay away. We'll talk about that in a while. But for the time being, let's address something that is really impacting the city of Mumbai and commuters across the city, because gas supplies, critical CNG supplies to the city have been disrupted. And Mahanagar Gas is in focus because they are the major CNG supplier to the city. The pipeline from GAIL was damaged on Sunday morning, and there is restoration work underway, but supplies have not been restored just yet. So let's ask the man of the moment, Mr. Ashu Singhal, Managing Director of Mahanagar Gas. Mr. Singhal, thank you so much for joining in. This is a very important issue, not only from a shareholder perspective, but from a city perspective. Can you tell us what exactly led to this disruption? What is the extent of it? And most importantly, by when can you restore gas supplies?
There was some activity going on, and there's actually 3-4 feeder lines which connect MGL network across Mumbai and nearby region. So we have got around 7,500 kilometer network, and it gets feed from various GAIL pipelines. So one of the major feeder line which comes from Uran, and it comes from through RCF complex to our main feeder station at Vadala. So that got damaged on Sunday morning, and therefore our supply to that station was completely stopped. As a measure, we have to immediately start emergency response plan. And in that plan, we have asked our industrial customers to shut down and go to the alternate fuels. And similarly, we have given the first priority to domestic pipe natural gas, and that is remain unaffected all through on Sunday or even today or Monday, Tuesday also. Thereafter, we have got around 390 CNG stations in Mumbai and nearby areas, out of which 230 are operating and 160 have been shut down because of non-availability of gas. So some of the gas we have diverted from other CGS stations through the looping network and redundancy network. So we are trying to have minimum impact on CNG as well. But the priority customers, that is the PNG, is totally unaffected, and the commercial customers are totally unaffected.
Sir, appreciate all your efforts, but I can tell you it's not really minimal impact. It's a huge impact by people who are trying to commute across and get to work and otherwise. Basically, sir, by when do you expect 100% full restoration? Also, can you tell us how much do you sell daily? I mean, as a daily quantum of sale in the city of Mumbai, and how much remains disrupted as of now?
We sell around 4 million gas, 4 MMSCMD, million standard cubic meter per day, and around 2 MMSCMD comes from the Vadala station. So some of it we have diverted from other CGS stations. So around 40% volume loss has happened. And restoration, the pipeline has damaged piece has been isolated. It has been, nitrogen has been purged. Now the cutting is going on. So that spool piece will be removed and a new piece will be added. And after that, nitrogen purging, some radiography testing, etc., and technical things will be done. And it is expected by today noon or afternoon, supply will be starting as normalcy will be restored.
Okay, all right. How much of your total volumes come from the transport department, sir?
Around 7% goes to the transport department, and we have tried to maintain the supply to the transport department, means BEST, MSRTC depots, etc. What has got impacted is some of the CNG stations through daughter booster stations, which is in the main South Mumbai, West Mumbai, and Navi Mumbai and nearby areas. So we're trying to see that whatever best we can do to restore supplies at the normalcy.
Okay, we really hope that those efforts, come to fruition, and we're back to normalcy, hopefully by this afternoon. Just moving on, sir, what are your overall volume growth targets for the current year across different segments?
We expect that last year we grew by 12%. So this year we expect the volume growth to be around in near to double digit, 9 to 10%. And as you mentioned, year on year, we have grown by around 10% H1 versus H1. And in H2, we expect to continue with the same performance. So maybe around 10% growth will be there. Most of it is coming from industrial and commercial, which grew around 24% last year. And this year also it should be around 20% plus. The domestic PNG is around 7%, and the CNG segment is expected to be around 9% or so, 8 to 9%.
Mr. Shingle, hi. Just a quick question on financials. What's the margin guidance for FY26 and currently the breakup of gas sourced, considering APM gas allocations have been reduced?
The margins have come down in Q2, but overall H1 versus H1, again, it was 10 rupees EBITDA per SCM. And we expect margin guidance to be slightly lower than what we have told earlier. Maybe from 8.5 rupees to 9.5 rupees EBITDA per SCM is expected guidance for this year. We have done our portfolio rearrangement, and most of the gas which was come down from APM side, around 35% CNG is getting allocated from APM for CNG segment, and balance is being sourced from different places. And most of the APM which has come down has been renamed as new well gas. So 10% is the slope for APM and 12% is the slope for the new well gas. So we have done our portfolio management, and most of us of this gas we are taking from new well gas, HPHT, or some term contracts are being used to meet this demand.
All right, so since we have you with us, run us through, those capex plans that you've laid out for FY26, and how much do you plan to add in terms of capacity this year?
390 pumps are with MGL, and another 90 pumps are there, 95 pumps are there for Unison. So total 485 pumps are there. We are expecting that around 80 pumps will be added in this kitty. So now the Unison is merged back as an MGL entity. So there are no, earlier it was 100% wholly owned subsidiary. Now it is a single entity as MGL. So we expect around 80 stations to be added, and maybe around 1,200 to 1,300 crore as the capex layout for this financial year.
Okay, so Unison is done and it's all getting integrated with your business. Any more acquisitions on the cards?
We already have one geography in Karnataka, and balance is not, discussions are going on, but nothing to be declared to the market as of now.
Okay, we'll wait for more details. So thank you very much for joining in. Really appreciate you giving us the full extent of the issue in Mumbai. And good to know that hopefully by afternoon, most of the gas supplies will be restored. That's MGL for the time being. Let's move on to commodities beyond gas as well. Manisha is here with the latest roundup. Manisha, good morning. I hope you're not stuck somewhere, gasless.
Well, not really. Thank God for that. But, the crude oil prices, I'll start with that, and they have continued to see further decline. Well, we have seen prices decline by 2.5% on this week. The markets are looking at more production from OPEC and even non-OPEC that is set to continue to grow. Having said that, the reason that you're not seeing prices decline too much as well is because the U.S. sanctions on Russia majors like Rosneft and Lukoil come in effect on 21st of November. There are export disruptions from recent attacks in Sudan. There's possibility of a U.S. military action in Venezuela. Iran seizure of an oil tanker in Gulf waters last week. So there's plenty happening around when you look at geopolitics that could impact crude oil prices, and markets are keeping an eye on all of these developments. But the other sector really is metals. So whether it's precious metals or base metals, it has all gone down in some profit taking. One, you have the US dollar, which is strengthened. And second, the markets are looking at a weak and a bleak possibility of another rate cut for the month of December. So gold fell 1%. Silver is now trading below $50 an ounce. Zinc is trading at a 2-month low. There is profit taking there. Copper is at a 1-week low. Nickel at a 7-month low. So, well, yes, across commodities, there's some bit of a profit taking that has continued in Asia today.
All right. Thanks very much, Manisha, for that. So that's the commodities picture. Slight profit booking across the board. Parag Thakur is with us, Senior Fund Manager at Fort Capital. Parag, good morning. Great to have you with us here. Thanks for joining in. You know, we'll talk about some of the news flow that we're waking up to this morning, but I want to just start with asking you about Grow and whether you took a bite, post-listing. Opened at 112 and 170 or so, 170, 180 yesterday. What do you make of it? And have you looked at the numbers?
So I think these are all, any businesses which become tech-enabled has operating leverage. And of course, the ROICs are also infinite in some cases. So these businesses get huge premiums, but I'm not happy paying such a high valuations to these businesses because I have a firm belief that any business cannot sustain growth of more than 30-40% forever. And so you should not pay more than 50-60 times for any particular business and such high market caps also. For example, many companies in this business are trading at half of this market cap, and these are age-old companies which we know. So I would say that I would refrain from buying into this momentum, and for that matter, any other tech-enabled businesses.
But is the valuation really so? I mean, that's why I asked you. Have you looked at because I was looking at it, right? 18, and we'll put out that link as well with our research team. So some 1850 crores in profits in FY25, and they're saying they'll grow between 25 and 30%, right? So which is what you also said. So there's earnings visibility. I mean, based on if you just do an Excel projection, should be 3,500 crores of net profits in FY28. So it's about 30 times, right? I mean,
unfortunately, life does not work on Excel sheets.
No, I know that was coming, Parag, but I mean, you got a project, right? I mean, if you're looking at...
So basically, see, we are happy making money in our old regional banks kind of names, which have...
Yeah, no, that's fine. You can participate in what you like, but is valuation... I mean, I heard a lot of general commentary that it's 50 times, 60 times, 70 times. The numbers don't say sort of point to that. That's all I'm saying.
Yeah, that is true. That is true. No, but I'm saying market caps are also very high.
Yeah.
If you compare it with any other traditional broking firms and all, the market caps are also too high. So for this kind of things, so it is much better than the I would say loss-making companies which have come out with IPOs and which are also getting equal or more market caps. It is much better than that. That I should have agreed. But I would say that. We don't feel all this is very sustainable, and that is why we stay away from it. Might be we don't understand them too much. It is a question of circle of competence also. They might be doing well. They might be great businesses. They might keep doing well. But I would say that it is a question of circle of competence also.
One general comment across for all these new listings, right, is that the first 1 month is kind of sometimes a little artificial because there's not too much supply, right? That lock-in, etc. So it's not about growth. It's generally true across the board. So real price discovery, I guess, happens after I mean, all these lock-ins end, Parag, right?
Yeah, correct. That is also true, and there is a lot of momentum right now. Markets are anything which is tech-enabled actually gets huge premium to the conventional businesses, which also might, by the way, uses technology. But these are purely set up after this technology revolution has come in. So these are getting huge premiums.
By the way, you'll have more to discuss and debate, Prashant, on Friday. Grow reports numbers on Friday.
Oh, lovely.
It'll be one of the most eagerly awaited, events of the day. So that's your date to figure out if
but I think as Parag said, right, these are tech-enabled, right?
Yeah.
Business, it's an extreme. He used the word infinite ROC. I mean, because you look at the unlisted Zerodha, right? And it's just the same team, the same number of people. You just have to invest in tech. I'm not saying it's a simple business, but the point is you don't have to put more money in to acquire customers. And it's network effect as well. So Grow I mean, I think that who was pointing out that they've started a slew of businesses apart from broking.
Apart from broking, absolutely.
And all that will...
Mutual fund sales, loan against shares, etc. And look, I mean, everybody can get technology, right? And a lot of the incumbents also, the larger, and they come from much larger financial conglomerates, right? It's easy to get technology, but surely something players like Grow and Zerodha have done right to become the largest brokers of the country.
You know, I'll tell you, I was watching this...
Starting way late. I mean, came in the 2000s, right? Not even later.
Yeah.
Post 2010, and we have established.
So I'll give you a global example, something similar. Actually, even more startling. There's a company called Cursor, right? It's now hit $1 billion in annualized revenues. $1 billion. You know how old the company is? 3 years.
Wow.
They've raised money at $29 billion valuation. Guess how many salespeople they have? 3.
This is scary.
So, you know, they were asked, how did you start, right? They said, we just opened a Stripe account. And that's it. I mean, you know.
Power of technology and the power of disruption. It's real. It's very, very real. Okay, on that note, we'll take a break. Lots of other stocks to discuss with Parag as well. And then we'll have our technical experts joining in to talk about how to navigate what's likely to be a soft start today. Back with Sudarshan and Mitesh in just a bit.
Welcome back. You're tuned into Bazaar Morning Call. Well, it's that part of the show when Hormuz joins us to give us those big movers in trade and also those that were packed with volumes. Hormuz, morning.
Morning, Nigel. And while we're talking about Grow all through yesterday's session, a new listing has been quietly making a very strong move on the upside, and that is Anand Rathi shares and stockbrokers. The stock has been on a 10-day winning streak now, and in these 10 days, the stock has risen 51%. And even in yesterday's session, the stock was up almost 5%. And in 9 out of those last 10 trading sessions, more than 10 lakh shares have been traded every single day. And in yesterday's session, we had close to 40 lakh shares that were traded for Anand Rathi. The 20-day average is 16.5 lakh shares. And out of those 40 lakh shares, 8.5 lakh shares were marked for delivery. The 20-day average here is only 5 lakh shares. Now, the 10-day winning streak, the average delivery volume during this 10-day period has dropped to around 29% of the total shares traded compared to the earlier trading sessions where the average delivery volume was anywhere between 40 to 42%. So, Anand Rathi on your radar. Of course, you're talking about Grow, so we'll take a look at Grow as well. And all 4 trading sessions that the stock has traded so far have been in the positive. Another 20% yesterday. Close to 50 lakh shares were traded on Monday, 6.5 lakh shares were marked for delivery, and the delivery percentage though, barring the listing day, has been on the lower side. Now on the listing day, 44% of the total shares traded were marked for delivery, but if you take a look at the other 3 sessions, that percentage ranges anywhere between 13% to 18%. So not significantly higher when it comes to delivery volumes, even though the trading volumes are higher. Narayana Health in yesterday's session, the top gainer on the Nifty 500, the biggest single day gain and volumes on record for the stock. The Friday's volumes were Monday's volumes actually. They were almost 1.5 crore shares were traded yesterday. The 20-day average is only 3 lakh shares. It shows the kind of volumes at which the stock was traded. But out of those 1.5 crore, only 14.5 lakh shares were marked for delivery. The 20-day average here is less than 2 lakh shares. And the stock has delivered positive annual returns every year since 2019. And lastly, 5 Paisa Capital, and that stock moved higher for the second day yesterday. There's a big spike towards the close of trade, 9% on that stock. The volumes yesterday were the highest in over a month, and 15.5 lakh shares traded. The 20-day average is less than 50,000 shares. And on the delivery front as well, 5.5 lakh shares were marked for delivery. Here too, the 20-day average is just around 25,000 shares.
Okay, all right, Hormuz, thank you very much for all of those details. Let's actually get you some updates from a Morgan Stanley note as well. Morgan Stanley is saying that 2026 is likely to be a macro trade in stocks. The brokerage also feels that most risks are likely to come from outside India. So it is here with the details. So fill us in, what is MS saying?
So it's an interesting note from Ridhan Desai of Morgan Stanley and where he details 2026 outlook. As per him, long-term story is gaining strength with government policy action, and most of the risks that India might face will come from outside, and 2026 is likely to be a macro trade in the stocks. As far as sensex outlook is concerned for 2026, base case where he finds 50% probability target is 95,000, implying an upside of almost 12%. Bull case where the probability is of 30%, the target is as high as 107,000, implying an upside up to 26%. And in the bear case where the probability is 20%, target is 76,000, and implying downside of almost 10%. Now talking about the preferred sectors, first one is consumer discretionary. He says urban demand recovery will aid the consumption, and GST cut that government had recently announced augurs well for the sector. Second one is industrials. Robust government capex and pickup in private capex drive overweight on this sector. Financials, rising credit growth and low credit cost will be offset by the compression that these banks might see in NIM, but deregulation that government might take will be positive for these banks. On some of the sectors, he is neutral. First one is consumer staples, because he believes that fundamentals could improve as rural growth in the last few months has seen an improvement. Technology is least exposed to domestic growth, although US recession is a risk for the sector. But AI debate is hurting multiples, but on the earnings front, he is not seeing any downside in the foreseeable future. But some of the least preferred sectors, first one is utilities. He is underweight given lack of cyclicality. Second one is energy. He prefers domestic cyclicals over global cyclicals, and healthcare because he is avoiding defensive sectors. And last one is materials, because he is taking cyclical exposures via industrials. We'll have to see over the next 1 year, it's 76,000 or 107,000 for Sensex.
Okay, all right. So thank you very much for that. That's the Morgan Stanley view on equities. Let's get back to our conversation with Parag Thakkar. Parag, Westlife Food. So Mr. Jatia bought some shares from the market. Not too much, I think just about 8,000 shares. But as far as Q2 goes, the performance was still sluggish. I'm just checking the numbers again. Same-store sales growth still in contraction territory. I think a little over 2% down year on year. What's your sense? Do you like anything in this space, Westlife or otherwise?
No, QSR space, see, after long, I would say 2-3 years of sluggishness might come out of, because overall consumption has picked up after the GST cut in the festive season. So I would say that this is a good sector to watch. Up till now, we have not bought anything. We saw good results from Jubilant Foods, and stock also reacted positively to it. So we will look into this space. It looks interesting. It had offered a long, I would say, 4-5 years ago, everybody was bullish on this theme, but then earnings never came. And so everybody gave up. So this is a good time to look at this space, in my view. And coming back to this Morgan Stanley note, I would agree with two things highlighted over there. One is, in India, I don't see any big risk because India's macros were absolutely brilliant. And one big macro factor which everybody forgets is corporate debt to GDP. India's corporate debt to GDP is so low, it is at 56%. And Indian corporates are under leveraged, and banking balance sheets are absolutely strong. So apart from current account deficit, fiscal deficit and inflation, these are the two big macro positives for India. And now, finally, we are seeing a double-digit earning growth coming in. Q2 results were very positive. I would like to highlight some of them. For example, SBI increased its credit growth guidance from now to 12 to 14%. With a credit cost of only below 50 bips. So I would say that L&T, for example, the best indicator of private sector capex or capex cycle, L&T is one order of around 1,15,000 crore in Q2, which was highest ever. They are sitting on 6.67 lakh crore order book. Mahindra has increased its tractor volume growth guidance. Escorts has also increased its tractor growth guidance. Reliance has delivered 16% revenue growth in Q2, and Q3 it will accelerate in retail. So I would say that all broad factors which you see, I feel, from Indian economy perspective are improving. So the only risk which can come is from outside. Suppose if US market corrects 15-20% due to this AI thing or something else, then of course we will also correct. But I would say that I would agree with two parts. One is banking and industrials will do well. And second is that any risk which can come from global side. On India perspective, I would say that once the trade tariff deal is signed and we get a tariff which is below 20%, I don't see any risk come from the Indian perspective.
Okay, all right. Parag, final question before we let you go. The outperforming sector or the comeback stock of this month has been Asian Paints. Nomura, they had turned the corner at the start of the month, and that worked very, very well. In fact, I had the author of that report, Mr. Mihir Shah, who had joined in yesterday on Finding Alpha. And he says there's more to go because the street is still very negative. He believes that the disruption wasn't as big as expected. The healthy competition is likely to continue, but it won't be disruptive. What is your view on Asian Paints as well as Berger Paints? A rank underperforming for the last 2 years. Now it seems competition seems to be evening out a little bit, and these guys are making a comeback. Your take?
Yeah, I would agree to that because whatever competition had to do, and this is not a geo kind of business, right? Where you have a fixed expense of spectrum, and so because ultimately Birla Opus will also have to buy same raw material which Asian Paints have to buy, right? So it was my view earlier also that this space cannot be disrupted for long term. It can be disrupted for 1 or 1.5 years, and so we also bought Asian Paints at 2,200. Of course, we booked profits also. But I would say that, and plus we are nearing a fair. So festive season was there. Now wedding season is going to come. So from near-term perspective also, and from long-term perspective also, I would agree with that view.
I have more questions, Parag. I'm not sure if we'll have time. I have to take a break though for now. So yeah, we'll take that break. We're going to come back in just a bit. The pre-open session is about 4 minutes away. And we'll have Nilesh Chug of HDFC Securities to shed more light on, of course, the India-US LPG import deal, which was, of course, flagged off by the oil minister yesterday. And, of course, with some technical trading ideas as well. Stay tuned. Okay, welcome back. We've got a minute to go for the pre-open session. Sudarshan Sukhani and Mitesh Thakkar are with us with what they want you to do in terms of trades. Gentlemen, morning. Great to have both of you here. Sudarshan, start with you first. You were saying, well, yesterday, your view was it's a day to be long and stay long. It worked out across indices. Given where we've ended in the overnight queues, what's the trade today?
Yeah, good morning. Well, sometimes we just can't help the outside environment. And we can see the US markets were down. Asia is not very conducive. So we are going to get affected. But that will not change the larger picture. The larger picture is that we are now in an uptrend, which should last for the next 1.5, 2 months. So if you have long positions, keep them. Your stops have to be a little wide at 25,700 and just suffer through this small dip that comes about. If you don't have a position, this dip is a buying opportunity.
Buy the dip. That's the call coming in from Sudarshan. Got it. Mitesh, what about you? What would you do? 60, 70 point downtick is what the GIFT Nifty was suggesting for the time being. The pre-open is not really aligned. But if you get the dip, what would you do?
Good morning, Nigel. I think, this time I'll avoid it or pass it rather because, multiple times we've kind of gone beyond 26,000 and failed to sustain or build upon that momentum. Maybe, this is an early sign of some kind of consolidation. So a 60-point dip will not excite me. But yeah, if you get closer to about 25,800, that's when I would look for buying opportunities. My belief is that we might be developing a new range broadly between 26,100 to about 25,800, 750 on the downside. And therefore, towards the lower end of the range is where I would want to be very keen.
Okay, all right. Let's get to stocks then. Mitesh saying he'll stand by buy this time around, but stock-specific action. So, Mitesh, let's get your picks first out of the way.
I have a mix of buys and sells. On the buying side is IIFL with a stop at 549 for targets of around 585. I also have a buy on Lodha Developers. It's a conditional buy, so let it get past yesterday's high. 1225 is what I suggest should be a trigger. If it crosses that, buy with a stop at 1209 for targets of 1260. And a couple of names on the selling side. The Emphasis had a breakdown yesterday, so keep a stop at 2710, look for targets of 2640. And Inox Wind, I think, post the numbers at a negative reaction, jump in volumes, bearish candlestick pattern. So sell with a stop at 150 for targets of 138.
Got it. Inox Wind, got that as well. Thanks for that, Mitesh. Well, Sudarshan, coming across to you, tell us your picks for the day.
Well, it's an all buy list. The only point is that depending on how the markets open, adjust your stop losses. But SBI Card is a buy with a stop under 870. Jubilant Foods, which had done very well, is a buying opportunity still with a stop under 590. Bharti Airtel is a buying opportunity with a stop under 2070. And Axis Bank is a buy with a stop under 1230.
Okay, all right. Thanks a lot, gentlemen. We'll come back to you all for your 9:10 call. But let's turn our attention to the oil and gas space. Well, India has signed a one-year deal to source liquefied petroleum gas from the United States. 10% of annual LPG imports in 2026 will be from the United States. To analyze this as well as the CNG supply disruption in Mumbai, we're now joined by Nilesh Guge, the analyst institutional equities at HDFC Securities. Hi Nilesh, good morning. Good to see you win. Let's talk about the LPG piece first with regard to the deal that India signed with the United States. What is your initial comments on it and who stands to gain?
Yeah, definitely it's a positive move for, I will say, overall Indian LPG market. It not only gives the stability, but resilience, and it's integrated the entire LPG ecosystem globally. So that's a definitely positive move from the government and the PSU oil marketing companies.
Okay, all right. What do you make of this, supply disruption here in Mumbai? MGL, we just had the management who joined us. They were saying things will get resolved. Your view on it, what are you penciling in terms of volumes? Will you have to, scale it back a little bit? Your take?
Yeah, see, our back of envelope calculation indicates that if supply had been stopped for, let's say, a couple of weeks, then it could be the impact of roughly about 3.5 to 3.8% at top line level. But they restore this supply in just less than a week or maybe just a couple of days, 2 to 3 days. So not much impact on the revenue, just for a couple of days, that's all. And that too restrict to the CNG because they continue supplying this domestic PNG supply.
Right. Got that. Nilesh, do you have a coverage on oil marketing companies?
Yes, sir. Yes.
Okay. And of course, Reliance as well, right?
Yeah.
My question is, we're in an environment where it's been actually various shades of it since COVID, that refining capacity has been, they've been, for whatever reasons, has been running, I guess, a little behind. And hence, especially on diesel, etc., cracks are pretty healthy, pretty strong.
Yes.
Is that something you've looked at closely? Standalone refiners have done absolutely fantastically well. Chennai Petro has doubled from its March levels this year. MRPL has done phenomenally well. The more diversified IOC, HP, BP, have done well, but not as well. There's a marketing component as well. First of all, what's your view? Will these high spreads cracks persist? And what's the best way to play them from here?
Yeah, you're right. The pure refiners like MRPL, CPCL in this environment will continue to do good. These cracks, fuel oil cracks are still better. So they will continue to perform better in, let's say, this quarter as well. So MRPL, CPCL, which are pure refiners. As far as oil marketing, where they are losing on some marketing margin because the cracks have moved up while the retail prices are there is no change in retail outlet prices. So they are losing on the marketing side. At the same time, they are getting on the refining side. But overall, if you let's look at from net perspective, there is not much gain for the oil marketing companies in this environment. This positive thing is the crude oil. The crude oil prices are remaining in the range of $62 to $64 per barrel. If I compare that with the last year, it was around $85. So that's the comfort that oil marketing companies are enjoying. Also on this LPG front, till 2Q, they were and there was under recovery of close to about 100 rupees. And now in Q3, the under recoveries have come off to about 40 to 50 rupees per cylinder. So that's a positive sign for oil marketing companies. At the same time, government has announced that 30,000 under recovery for last year will be paid to oil marketing companies over next 12 months, starting this month. So this will strengthen their balance sheet as well. The working capital condition will be good for oil marketing companies.
And on the standalone refiners, you think there's more to go? Because there are various arguments. GRM's moving up, the replacement cost as well is quite high in comparison to what they're trading at, and their balance sheets are pretty okay. Do you think there's more scope?
See, but cracks are still in a healthy position, I will say. So their earnings this quarter also will be very good. So still, I mean 1.5 months is left, but still till today, the margins are much better compared to last quarter, compared to last year. So there is still some steam left in this MRPL CPCL.
That the market already knows. The point is, stocks will try to price where things will be 6 months down the line. Is there any way to tell?
See, overall, in my belief, in the long run, these cracks may not sustain at such a high level. If you take the view of, let's say, 1.5 year down the line, there will be some pressure on particularly diesel cracks and gasoline cracks. But momentum is in their favor as of now.
Okay, all right, Nilesh, we'll leave it there. Good speaking with you. Thank you very much for joining us. And good to get that perspective from you. Well, look at that. Is that Grow is up another 6%? I think 185. Well, let's have the Grow stock in the pre-open session. That was, the first question to Parag. And look at that. I mean, 10 rupees, 10.5 rupees once again. So it's just a blockbuster move since listing. Sometimes, I mean, they're right there and they do so well. Well, I think we just want to look at the pre-open and where they've ended as well, and then we can kind of sort of look at some of the other stuff. So yeah, I mean, 8 points, 26,021. The Nifty Bank should come up, and we'll look at that as well. What we'll do is shine the spotlight, of course, on Max Health in a bit with Ekta, where numbers came through, and we have the management with us as well. And we look at blocks. I mean, some have happened, and I think some are yet to happen. So we'll just revisit some of this stuff, which is coming through. So 7,000 crores worth of blocks today is the lineup. Let's get those calls out of the way. 9-10 calls. Sudarshan and Smitesh are with us. Sudarshan, what do you have?
It's Jubilant Foods, buy with a stop under 590.
Mitesh?
Yeah, I'll go with the buy on IIFL. I think good continuation patterns over there. So buy IIFL. And as I said, look for targets of around 585.
Okay, all right. Jubilant Food and IIFL are the two calls coming through. Okay, as promised, let's revisit some of the blocks, right? And the status as of now. Vivek, take it away.
Well, that's right. So we were targeting 4 blocks that we had access to, out of which 2 are already out of the way. In fact, one was a bit of a surprise. ITC also saw a large block deal, and Zinka Logistics at Blackbuck, that particular block deal too has transpired. Now, we are still awaiting 3 block deals. Possibly closer to market open is when, or just post market open is when these could happen. Emphasis, remember yesterday we told you that large trade would happen along expected lines. You're looking at the private equity Blackstone that holds 40% stake, looking to exit close to 9.5% stake at 2,570, a little over 4% discount. Offer size or the size of the block will be in excess of 4,600 crore. Paytm, that's 197. Again, over here, Safe Partners as well as Elevation Capital are looking to sell close to 2% of total equity at a 4% discount. This particular block size is again a little over 1,600 crore. And lastly, Emcure Pharma. Again, here it's a private equity, Bain Capital, that is looking to exit close to 2% of total equity at a 7% discount to yesterday's close. The size of this particular block will be close to 500 crore. So it'll be, I'm assuming there will be a little bit of pressure on all of these stocks, given the kind of equity supply that they would be seeing.
Okay, all right, Vivek, thank you very much. So Emcure is going to be on our radar for sure. Let's go back to Ekta now for some details on Max Health. Ekta.
Well, yes, there are some brokerages which have written on Max Health. So, for example, UBS has a buy with a target price of 1550. They've said that the brownfield capacity addition is going to drive growth and earnings. Q2 revenue and EBITDA growth of around 21% and 23% is what they reported. A couple of details from the conference call. The management indicated that the issues related to cashless service for insurance patients has been resolved, and mentioned that there was no or only limited impact as patients shifted from insurance to cash in such instances. Jefferies has a buy and a target price of 1400. According to them, the September quarter was a beat led by higher volume. EBITDA was in line and profit was boosted by a one-off. Adjusted PAT was also in line. The CGHS revision, in fact, adds 5% to the FY 27-28 EBITDA, and new beds will be operationalized in phases, thereby limiting the negative impact on margins.
Absolutely. Thanks very much for that. Stocks at about 1141. Mitesh, I think, is still with us. Mitesh, any thoughts on this one? Max?
Max Financial is something which I'm not tracked regularly, but last week it made a fresh high and then gave a pullback. So as long as it's above 1650, I think is good, and I think it should not only clear the recent highs of 1720, but head towards 1800. So in that sense, a positive view over here.
Okay, that's fine. Max view on Max Financial, where you think you looked at the charts. Just one more. The PSU bank space was up about 1% yesterday. Mitesh, are there trades? Do you have longs there in that space?
No, I think not yet, Prashant. I think, Bank of Baroda, Canara Bank were calls sometime back. Now to buy them after a big rally, I think is slightly tricky. Even though BOB, I think I had a call yesterday because it came down after about 7-8 days of pullback to the gap support area. But a positional call now, I think, will be very late.
Just one more name, transformers and rectifiers, right? So big damage on charts and now recovery for the last 2-3 days. Any view here?
No, I've not been tracking the stock, sorry.
Okay, all right. Thanks very much, Mitesh. We'll chat again. Appreciate it here on CNBC-TV18. Well, I think let's just quickly take a look at the... I think it's just a couple of seconds to go for the market open. As always, we will look at the indices. We'll go down and look at individual stocks, etc. Because there is enough and more buzzing, as I was saying. Almost feels like there's perhaps... At least in lots of segments of the market, there's a big bull market going. It doesn't show up on the indices in a meaningful way. Although indices have been making new highs. It's not that indices are lagging behind, far off highs. But, I mean, the momentum in many of the stocks across many segments is a lot more as compared to the headline indices. 26,021, 26,100 basically is the upper end of the range. The Nifty Bank, of course, it's a rising channel, which we've been highlighting. What do we have? 55 lower on the sensex, 40 lower on the Nifty. So, it's kind of just a small reaction on the downside this morning after last night's sell-off. Mid-cap index is flat. The small-cap index will come up on your screen. And I think there as well, we'll have the rates on your screen. So 20 points, so nothing at all. It's a very, very quiet start. A bit more pronounced now, 0.25% on the Nifty. 25,955 is where the index is starting at. The Nifty 50 heat map gives you a quick sense of where stocks are opening, and then we'll get down to it. 40 odd names are lower, and about 9 or 10 stocks are higher right now. Tata Steel, Bajaj Finance, Tech Mahindra, etc. on one end. Max, Healthcare, Returnal, JSW amongst a few winners to begin today's session. 70 points now on the Nifty on the downside. And of course, all these blocks, etc., which we will point out and highlight in terms of individual names. Surabhi.
Yeah, absolutely. On the Nifty, I mean, there are no major huge polarized moves either up or down. It's just an overall sense of profit taking that you're getting. Some of the global facing sectors and names, for instance, metals, there's money coming off there. Hindalco and Tata Steel are your two biggest losers on the Nifty right now, down about 1% each. Some selling in financials and in technology, the two parts of the market that have done very well in the recent past. So Bajaj Finance 1% lower, Bajaj Finserv 1% lower, HCL Tech 0.5% lower, Infosys 0.5% lower, Reliance also is starting 0.5% down as we get into the opening trades right now. Some of the auto stocks, they were quite revved up last afternoon, but again, the color is red today. So names would include the likes of Mahindra & Mahindra to start off with. Even Maruti is down about 0.7%. L&T is lower by about 0.5%. So it's overall sense of profit taking is what we're seeing. On the upside, not too many names to count right now. Max Healthcare. And I'll watch out for the Bank Nifty because it's showing so much momentum and strength. So if this is to be a buy the dip, then will the financials get bought first? And there are some signs of that already. Axis Bank, HDFC Bank, they're in the positive territory. SBI Life is exactly at the flat line. ICICI Bank is just about 0.25% lower. So let's see. Financials, a big watch point for me. Nigel?
Well, that's right. And just take a look at the capital market plays. Groww is growing yet again. Yesterday, it hit a 1 lakh crore market capitalization, which was a feat in itself. Today, it's at 1.2 lakh crore in terms of market capitalization. Yes, there will be a limited float that's playing out there. That could be one of the reasons. But the stock, from around $100 just last week, what a 1 week of listing. It's moved to around 190 rupees. Big move is what we're seeing on that particular name. Giving it company on the upside is another, newly listed company, which is WeWork. That stock, in fact, is moving on good volumes. That is well up, close to around 5.5%. Fairchem Organics, that's a stock that doesn't have very large volumes, only 50,000-60,000 shares traded out there. But that, for some reason, is coming up on the sheet that it's up close to around 13%. So Fairchem Organics is another one that's moved up and about in today's trading session. Westlife, promoter chipping in very, very small quantum out there. That stock, in fact, is up close to around 5% as we speak. So good up move is what we're seeing on that particular name. And pull up a couple of other names as well. RateGain, there was some promoter buying out there, 1.5 lakh shares. I'm not sure whether or not the stock is, gaining out there. In the last 1 month, it's already up close to around 11%. RateGain is another one that could come up for you on the screen. Very, very mildly higher. And a few other names. Keynes Technologies will be having the management very, very shortly who will be joining in. For the time being, the stock is down close to around 3%. And you have Blackbuck. There was that large trade that got out of the way in pre-open. That stock is continuing its upward journey. And Paytm, as you can see to the bottom of your screen, post the clearing out of the large trade, that one as well has seen a good recovery from the lows of the day. Also keep an eye out on Tilaknagar Industries. I can see some large volumes out there. The stock has seen a fairly decent correction in the last few days. That's pulled back a little bit. On the NSE, the volumes are far higher, coming up as one of the top volume movers out there.
Well, there is enough and more action, right? Across the board, which is coming through. Market breadth is negative. About 1450 stocks are lower and about 900 stocks are higher. But as always the case, there is enough and more activity on the upside with volumes, which is, I think, the case today as well. Piramal Finance is up 5%. So it continues to move from strength to strength. Listing was, I think, on the 7th of November. And just look at where it is now, right? 1260 to 1640 now. Piramal Finance moved up very, very strongly. There is Pine Labs, which is up 2.5%. You got WeWork. I think there is a Jeffries initiation, 5% on WeWork, 640. This 5 Paisa, which is up 11%, 350. It's coming up with very large volumes for this point in the day. GMR Power had a very large move yesterday, ended about 7% higher. Stocks at about 131 right now this morning. Aster DM is coming up with 3.33% gain right now. Westlife, Jubilant Food, of course, saw that big move yesterday. 4% on Westlife. That's McDonald's, 565. And I can go down and look at more names, but this is the bulk of where there is volume as we start today's trading session. You've got these silver ETFs, etc., which are starting lower this morning. So keep an eye out on some of these names. And more stuff on the downside. There's some stuff which is opening up with volume. Lenskart is down about 2% this morning at about 422. Sirma is down about 1.25%. Transformers Rectifiers, big recovery from the lows. It's down about 2%. And so on and so forth. Gautam Shah is founder, Goldilocks Global Research. Gautam, great to have you with us here. Good morning. Thanks very much for joining us. New highs, I guess, across indices. I just want to start with the Nifty Bank. It's almost funny because, so a viewer wrote in saying, well, when you start asking about markets and what will do well, just preface your question by saying that, please tell me what will do well. Don't ask and exclude financials because financial seems to be consensus out there. So वो तो ठीक है, बाकी बताइए. But so I thought I'll start with you and how you think about it on financials, Nifty Bank, and the structure there. PSUs, privates, go on.
Good morning, Prashant. Banking might be consensus, but you can't be complacent. The reason being it's such a big heavyweight for the Nifty and the Bank Nifty that if banks don't do well, our markets go nowhere. And I think we've seen this over the last few years. And I'm liking the way the Bank Nifty has shaped up beautifully in the recent past. Just a couple of months back, it was languishing at the lows and people were questioning banks because of the positioning of the economy, and then the GST measures kicked in and people started to believe that things are looking better. So if banks are a reflection of the economy, which we want to believe, then I think it's a good place to be in. And I think the chart setup has been phenomenal. The fact that the Bank Nifty has led this entire market move and getting past that 58,500 resistance number in the last couple of days, I think is a bigger positive. So I'm tempted to believe that the Bank Nifty is moving towards that psychological number of 60,000 in the near term. And over the medium term, you could get a 67,000. So there is still about 10-12% upside for the Bank Nifty. And if that were to happen, then the Nifty and the overall market is going to be safe. But within the banks, I think in our last two interactions, I did speak about PSU banks being the poster boys. I think they've had a phenomenal run if you look at the top 4 or 5 names. And I think the PSU banking index is going to do much, much bigger things even from current levels. The private banks will do well, but then it's going to be in line with the Nifty returns. But the real trade is with PSU banking, and the overall financial space, NBFCs, housing finance companies are all likely to do well and take this market higher.
Okay, so sounding optimistic, and that's how you've been for a while, Gautam. Good to have you in. So within financials, let's try and break this down, right? Because it's a very large universe. And there's so much going on. There are all these deals that the tier 2 banks are now getting a huge surge of capital, right? Foreign capital is flowing in. So now, prioritize it for us. Mid-sized banks, large blue chip names. Should you look at capital market plays? Because a lot of these stocks have come back despite all the regulatory back and forth. Should you look at insurers? Just, drop a waterfall for us, so to speak.
See, I would now stay away from mid-sized banks because I think they've had a phenomenal run. I think we are behind the curve. We are no more ahead of the curve. Money has already flown in. We've already seen a massive trend for many of these banks in the last few months. So entering them at these levels might not be ideal. But then if you look at the top PSU banks, even at current levels, including the top PSU bank there, I think there is potential for 15 to 20% upside, something which I don't see from any other financial stocks. And I think the top NBFCs also we've liked. And third in the pecking order would be the housing finance companies, which I think is a trade on what RBI has done and the pickup in the economy. So that would be my picking order: PSU banks, NBFCs, and housing finance companies. The typical HDFC Bank and Kotak and ICICI, they will do well, no recommendation. But then, as I said, they're just going to mirror Nifty returns and would not do anything special.
Okay, sorry. So your order of preference is PSU banks, housing finance, and what else did you say?
NBFCs.
NBFCs. Within NBFCs, I have to ask you about gold financiers, right? Look, what is going on? I mean, what did Muthoot do that day when the results came out? 10% and surging. So we got your order. It's PSU banks and it's housing finance companies. Within NBFCs, are there any specific pockets, and where do these gold financiers fit in?
No, I think we have become neutral on gold and silver. We believe that these are good levels for profit booking. Gold and these gold financing companies have typically been a proxy trade to gold and silver in the last 1.5 years. I think it's already played out. These are good levels to indulge in profit booking. I know there is a little bit of madness on the screen, but that's how tops are made. That's how stocks become overbought. I don't think the trade is there. I think this market is moving to other pockets. I mean, if you look at metals, the comeback in capital goods, comeback in engineering and industrial stocks, slight comeback in pharma. I think these are some pockets that we like. And overall on the Nifty, I think we continue to be quite positive as well.
Okay, all right. Hi, Gautam. Good to hear your thoughts. I remember you telling us that by January, you probably could see the Nifty taking aim at around 27,000 odd. But I think for the year end, you had a target of around 26,700. So let's revise that number. Nifty. The small cap index, the portfolios are not feeling like the markets are on their way to fresh all-time highs. The small cap index is facing resistance. I think the level you were mentioning is around 20,000 odd. While the mid cap, the target you had set earlier, you said once mid cap index gets past that 60,000 odd, it could look for more. So tell us the targets both on the Nifty as well as on the small cap index.
Well, thank you for revising the numbers. I think you were spot on there. We continue to be quite positive. I think 26,100 is really the line in the sand. The market is trying its best to get past this number. We were dealing with a lot of negatives a couple of months back, but I think as we speak now, the news flow from US is better. The AI trade seems to be reversing. Domestic money continues to be strong. There is definitely lower FI selling. People believe that the GST measures will kick in, and we are in a seasonally positive period. And the earnings season has gone off relatively well. Given all of these factors, I do believe that the market is at the perfect platform to confirm that breakout above 26,100. And once that gets confirmed, we are looking at 26,700, possibly this year itself, and thereafter 27,500. But I still believe that the bigger trade is in the mid caps and the small caps. As we speak, the mid cap index is at lifetime highs. The small cap index could take a move towards 20,000. So I think one big wave of strength in the mid caps and small caps could be coming over the next 3 to 6 months, while the Nifty does well but does nothing special.
Okay, all right. And the other one you had spotted out the last time around was the big boy. When the team requires the big boys to play, you turn to the largest one on the index, Reliance Industries. I recall you saying that was good for more. It seems to have got its act together. Now it's just, I think, 2% away from the 52-week high. How is that looking on the charts? Will that be one of the leaders if we need to, move towards the 27,000 odd mark?
I think the leader will still be the banking and the overall financial space, but I think it will be very well supported by the energy space led by Reliance. I've liked the way it has shown relative strength in the recent past. It's a stock that has not done so well in the last 1 year, but I think the signals are there to suggest that even it could move to lifetime highs and beyond. And not just Reliance, the entire energy index seems to be on the cusp of a major breakout. And if that were to happen, I think a 15% move on that index is likely. So IT, we remain negative. So I don't think technology is going to do anything special, because I think that's a multi-month underperformance that IT will go through and is still going through. But Reliance and the entire banking space will help this entire market higher.
And you briefly mentioned the metal index as well. And I recall, a couple of times ago, I think maybe in September, you said the metal index is good for a big melt up. I think you were talking about 20% up out there. Actually, it's done very, very well from that September chart that we had. From ballpark 9,000, we're holding at around 10,500. So we've done 15% of the 20% you're talking about. And with metals, we know it's about momentum, not so much about valuations. Where's it headed from here?
I just had a call with a couple of institutional investors a couple of days back, and the question was, how can you build a technical case for metals when fundamentally we are not in a position to join the dots, which I think is a fair argument. But maybe market knows something that we do not know, and the news flow will come out at some point of time going forward. But clearly, base metals, I think, is a very big trend. I mean, look at copper, zinc, aluminum. I think some of these base metal charts are excellent. So if you want to believe that metal stocks in India will be a proxy to that trend, I think that could be one explanation. But the chart setup is phenomenal. I'm looking at another 15% upside from here. Our working target for the NSE Metals Index is about 12,000. I think we will get there gradually. And I think it's going to still surprise a lot of market participants, because everybody is focusing on other sectors while metal stocks, I mean, look at the top names. They're either trading at lifetime highs or still very, very strong.
Just one maybe risk factor, Gautam, is have you looked at US charts, etc., all okay? Or you think there's I had this chat with a completely fundamental investor, but he was pointing out, Naren, that the risk comes from US. If US falls 15-20%, which is no one's case right now, but you've got to look at outliers in that sense. I mean, no one will be spared. But technically, NASDAQ, Russell, Dow, etc., have you looked at those?
Prashant, for the last couple of years, people as market participants have been saying that there is a possibility of a 15-20% drop for the US, and it just keeps moving higher. That's been the case for a year and a half, and we've had massive uptrends. In fact, we turned bearish on the US a month back in many of our recent reports. But while we were analyzing US, and when we looked at India, we felt that the correlation is not there. And I think a great example is the last 2 weeks, because we've had a sizable correction in the NASDAQ, the S&P, and the Dow. But the Indian markets are still around levels of 26,000, because this correlation we've talked out over the years. If you actually divide the Nifty by the NASDAQ, we are at a long-term support. So I'm tempted to believe that if the US markets were to see a plain vanilla correction, which is typically 5-7%, which I think will play out, I don't think Indian markets will get impacted. And as some analysts have been talking about, AI trade reversing is great for India, I would be in that same boat. And I do believe that money will start flowing into emerging markets, including India, a lot more. Any which way, I'm firmly of the view that China is the next big opportunity for the next 18 months. I've maintained that. So China will be the poster boy market going forward. But India, I don't think will get impacted because of US weakness.
And for your clients at Goldilocks, how are you advising them to get exposure to China? I mean, through funds?
I think there are some ETFs through which you can take, exposure. There are limited number of funds. I remember a couple of years back, there were limited funds in gold and silver as well, but they all came in and, people participated. So I think China opportunity is limited. I'm sure it'll get better as the price action gets better.
Okay. All right. Gautam, thank you so much for all that perspective, local as well as global. Quite helpful. And we look forward to the next conversation. You have a good rest of the day. Well, let's move on to our next corporate conversation. And the company we're putting the spotlight now on is Keynes. The company had a pretty steady quarter. In fact, the numbers look very, very good, if you just look at them optically, because the revenue growth was 58%. Though some will argue on the street it was a tad shy of really elevated expectations. The company also saw solid margin expansion, and the order book has seen a year-on-year growth of nearly 50%. Mr. Jairam Sampath, CFO of Keynes Technology, is with us. Mr. Sampath, thanks for joining in. So it's all guns blazing, right? Your top line is growing at nearly 60%. You've had margin expansion. Your order book is swelling. And I think in the call, you guided for better working capital cycle and higher operating cash flows going forward. So there's just, so much going on. Before we talk about the base business, I actually want to come to your new businesses that the street has been very excited about, because they're all now, chugging along. There's the OSAT facility, where apparently you've already tried up 60% of that capacity with the, in terms of orders. And then there is PCB. And everyone's so excited about these printed circuit boards, right? Just the other day, we heard Amber announcing an acquisition. There is obviously Sirma that's setting up this huge capacity in Andhra Pradesh. So let's start with the newer businesses first in terms of what their contribution is going to be as we get into next year, and how's the ramp up shaping up, OSAT and PCB.
Sure. A very good morning to you and all the viewers. I think you got it right. I think the existing businesses are doing well. Like I've said before, these are all businesses which work over the long term, in the sense that order books typically span more than 1.5 years or so. As far as new business concerned, we were quite lucky that our OSAT business, we were the first in the country to ship out assembled wafers, that is integrated circuits. And this was a 5 wafer module, which we shipped out for one of our clients. And you're right, a bulk portion of the first phase of capacity has been already tied up. And there are 3 major clients, and each of them potentially can tie up more than what we've offered them yet. So from that perspective, it's doing well. And I think our main plant is also getting ready. And by the end of the year, the pilot plant and main plant both will be functioning in Sanand. As far as the PC board is concerned...
Before that, sir, Mr. Sampath, before we talk PCBs, now that the plants are getting commissioned and 60% of your capacity is tied up, what are we talking in terms of revenue accretion? Say maybe, I'm not sure how much you'll book in the second half this year, if at all, but if we talk full year basis, FY27, how much revenue will you start getting from OSAT?
See, I would be surprised if we exceed about 1,000 crores in OSAT in FY27. Though earlier projections were about 1,500 crores in FY28 out of the $1 billion that we're talking about. So in terms of Indian rupee, I think next year will probably come somewhere near or even exceed about 1,000 crores or so. And also there'll be other clients addition, which will be in the advanced packaging area too. So right now we've got 3 clients in the modules area. One of them is power modules, the other one is MEMS modules of different kinds, and the third is also another power module. They're all large companies, and once we get approvals from all of these, one of them we have got, another 2 we have to get. Once we get approvals, I think we can probably look forward to even bigger businesses coming in.
Okay, all right.
Yeah, about 1,000 crores is something that you can probably look at.
1,000 crores in FY27, right?
Yes.
And this business will give you what sort of a margin? Obviously, as you grow and full capacities come on, then operating leverage kicks in. But on 1,000 crore of revenue, this will work at what kind of a margin?
This will be margin accretive to our existing business. I'd leave it at that. Maybe it will be significantly higher than the existing businesses.
All right. Got it. Hi, Mr. Sampath. Good morning. Good to see you in. And that $1 billion revenue target by when?
FY28 was what we had committed. Probably early in FY28 and 12-month running basis will probably exceed that.
Got it. So you have your target set in mind for the next few years. But let's talk about the near term, FY26. First half of the year, you've done well, actually. You've grown by close to 47%. However, for the year, you're guiding for around 60% growth. So part of the street believes you're being a little too aggressive. And the second half of the year will require a very, very good, number to get to that. You'll have to grow by, I think, roughly around 68, 69% in the second half of the year on a year-on-year basis. You're sticking to that 60% revenue growth for the year, and also give us a margin band, because what was positive in the past quarter was your margins expanded and, it looked much better than competition as well. Product mix, operating leverage played out. So what is the rough range?
Yeah. So whenever we give a kind of an estimate or a guidance or a target publicly, it's based on a slightly longish term perspective. It's not just based on what happened last quarter or what is going to happen next quarter. That perspective, I think we can hold the guidance for this year, whatever we have given. That kind of growth is there in the order book for sure. Unless there are some major issues in the marketplace which are external to the company's or industry environment, I think we are set to achieve those numbers. In terms of margins, I think good news is that it's looking up a little bit because of the mix of different businesses that we get. So we are fortunate that in the order book as well as in the actual businesses in the first half too, we have had a margin improvement. And I think this will sustain in the near term, maybe a few years or so. And next year we get the newer businesses coming in. So they also are, from the perspective of margins, they are higher. Of course, we are always concerned about the quality of business. It's not just the margins, but also the kind of technology that we have to employ to do it.
So, Mr. Sampath, 16 to 17% margin, you can maintain it, right, in this range for this year? And then
around 16% is what I would say for the year end.
Okay.
And we'll see. By third quarter, it will be up.
Just one more question, sir. At the start of trade, there were a lot of large trades that took place on your counter. Are you aware of who were the participants, who were there in the large trade? I'm getting some feedback from a couple of desks, but I just wanted to know whether or not you're aware of it. Who were the participants?
No. We see what happens in the marketplace. We are not aware of it, and we also don't bother too much about it because, see, our job is to make sure that the company's performance and the customers are catered to and so on. The remaining thing, what happens in the marketplace, is something which, frankly speaking, is out of our control. And we are also not aware of anything that seems to be happening.
Yes.
So people will do what they have to do. We do what we have to do. That is outperform the expectations.
Now, just clarifying, sir, since we had you on air and since the stock was down and the volumes are big, just want to know whether or not you were aware of it. As you're saying, market does a thing of its own. You focus on business.
Sure.
Okay, well, I think we'll talk about the PCB thing in a later conversation. I got to it, but thank you very much for joining us. Appreciate it very much here on CNBC-TV18. Well, I think we want to talk about Max Healthcare, which is the next management of the program. They reported numbers. Profits have been aided by favorable tax impact of 150 crores. The company says cash flow was weak due to delayed institutional receivables. We are now joined by Abhay Soi, Chairman and Managing Director at Max Healthcare. Abhay, good morning. Great to have you with us here. Appreciate it. Prashant this side. So just briefly, if you can characterize what you saw in the quarter, how is third quarter panning out in terms of basic RPOP, occupancies. If you can give us the status so far this quarter, and of course the environment for the second quarter for which you've reported. And specifically with regards to the CGHS rate revision, what is it expected to do to your revenues? What can it do to margins as well? Go on.
I think last quarter was, this year we haven't had too many seasonal patients. So last quarter was impacted negatively by that. Typically you have a higher occupancy. So Q2 this year versus last year, we had a huge amount of dengue patients and so on. But this year seems to be that monsoons have graduated straight away to winter. and therefore you did not have the seasonal sort of variants of diseases which came through. Having said that, in spite of that, you had a 21% growth of top line, 23% growth of EBITDA, and close to 60% growth of profit after tax, owing to largely, like you rightly said, about 149 crores of one-time benefit due to the merger on PAT. Otherwise, the increase was about 16%, which is again healthy as far as we are concerned, given the fact that it was a low occupancy quarter compared to quarters previously. As well as the fact that, coming into the year, we've had early Diwali into this quarter. We had early Diwali in October. And on the flip side, we've had the CGHS impact, like you rightly sort of pointed out. CGHS should give us, when it comes through entirely, because certain rates, categories of super specialty have yet to be sort of streamlined in the government's portal. But once it comes, we are expecting it, the process to be completed any day. This should give us a fillip of over 200 crores towards the top line, and almost entirely all of it should flow to EBITDA as well.
200 crores, FY27 revenues, and almost full pass-through into margins as well.
Yes, about 90% of it, 85 to 90% of it should pass through to
Abhay, two questions. I think international patient growth has been pretty strong. So it's now about 9% of your business. So if you can comment whether that is picking up and that momentum will continue. And second, we broke the story. It's a few weeks old now that the government actually has been part of negotiations between insurers and hospitals. I mean, the end aim is to actually, lower the cost of healthcare for consumers, for patients. And with regards to some hospital chains, it's been agreed that treatment, there won't be any rate increases as far as treatment costs are concerned for 2026. Could you confirm that for us from Max's perspective?
I've yet to hear of any hospital or anywhere where there's been any arrangement that there will be no increase in prices for 2026 or any year for that matter. You asked two questions. One is with respect to international medical tourism. And the second is with respect to any intervention or any sort of capping or implicit tacit understanding that prices will not be increased. I think let's take a step back. Let's look at the hospital sector. And let's remove one fallacy particularly with respect to medical inflation in India. I keep hearing of all sorts of sort of numbers being tommed around that medical inflation in India is 13%, is 15%, and whatever else it is. The fact of the matter is that the medical inflation in India is not more than 2 to 3%. And it has been that historically. And now why am I saying this? I mean, you're aware that the average revenue per occupied bed, for all listed players, has typically hovered anything year on year, has hovered anything around 7 to 8%. If your average revenue per occupied bed is not in excess of 7 to 8%, inflation certainly is a component of that. It cannot exceed that. This 7 to 8%, like you mentioned earlier, also has a component of international business, which has been growing by 25 to 30%. It has a component of oncology or cancer business, which is growing at 25%. It has a component of robotics, which is growing at 35 to 40%. All this is real growth, immunotherapy drugs, and new sort of innovations which come into the market. So if I remove all of these, you come down to medical inflation. Medical inflation typically would mean for the same service, for the same procedure, what would the inflation or the price change be? You can't change the basket, right? And if you look at the same basket of procedures, the price increase is not more than 2 to 3%. The healthcare sector, even if you look at the top, 5-7 players within the healthcare sector, operating at a 10 to 12% net profit margin. When you look at a 10 to 12% of net profit margin, what it also includes is that the investments that you make in technology with that, all the new beds that you're setting up, which is so required in the next decade for the aspirational India. Because you're just not going to have the number of beds 10 years later.
No,
So Abhay, point taken, and I think, so you're saying 2 to 3% is the medical inflation and has been that historically. So for so to that question, you're saying absolutely no. There's been no discussion, nothing tacit, otherwise implicit, explicit, nothing, right? In terms of capping. I'm just
not at all. Not at all.
Nothing at all.
Okay, and so to that extent, and we had a similar conversation with Ms. Sunita Reddy as well, just to understand if there is any agreement in terms of not revising prices or revising within a certain band. You're saying nothing of that sort. So looking at prevailing trends, what can patients expect? I mean, what would be your definition of reasonable medical inflation over the next, say, year or two? What sort of a price appreciation? Which also brings me to the margin question, because you've had, decent margin expansion as well. So would the margins at, say, 26% thereabouts be sustainable, or could they look even better?
Look, you're mixing two things over here. First and foremost, medical inflation, and you don't revise prices of healthcare on a monthly basis. You typically do it on an annual basis, unless there's been a huge sort of increase in minimum wages or some sort of cost impact, which is sudden, that you would do it perhaps mid-year. But typically, and that would be 30th of September. Otherwise, you would wait for the end of the year. And historically, that's the way it's sort of happened. You've never seen hospitals revising.
That's what I'm asking, Abhay. I mean, because as we step into 26 on an annual basis, what sort of an increase, across industry, or if you can talk to us about yourself, what could we be potentially looking at?
Would be the same as it has historically been, which is 2 to 3%. Your salaries go up by 7%. You need to push that through. You will push it through, and your fixed cost is about typically 1/3 of your revenue. The fixed cost goes up by 6 to 7%. And in order to absorb that fixed cost, you have to push it through increase in prices by 2 to 3%. Historically, that's been the case, and that is the case which is going to prevail going forward as well.
Okay, got that point. That is how you're looking at pricing and inflation going forward. Then on the margin front, this quarter has, of course, been good. RPOB has been moving up. Margins have been moving higher. So what can you guide for the remainder of this financial year and also the calendar year? Because I guess the price resets happen calendar year-wise.
So again, price increase is a very small component, of margins increasing. Margins increase because you also start operating at a higher capacity. If somebody is operating at a 50% capacity, will have lower margins compared to somebody operating at 80%.
Oh, absolutely. There are a lot of operating parameters that feed into that margin line, not taking away from that at all. We're just trying to get a sense on how the second half will look, with respect to margins.
The second half is typically better in terms of margins by slight. But having said that, look, I'm not going to give forward-looking statements. I've never done that in the past, whether it's quarter or annual basis. What I can tell you structurally, margins, as your occupancy sort of increases, your third and fourth, but typically your fourth quarter is the best. So you'll see your margin expand in the fourth quarter because your occupancy levels go up. And as you put up more and more capacity, you're going to have more and more utilization. Even your fixed cost, which is management related to the sector, gets defrayed over a larger number of beds which come.
Okay. All right, Abhay, very quickly before we let you go, your ROEs and ROCE is expected to improve from year on. And I'm reading a domestic brokerage note that's very bullish on your company. They believe that there is a 400 basis points ROCE and ROE, expansion from year on. Last year, I think you did around 15-16% on the ROE and ROCE. They're expecting it to go to 19 to 21%. Possible?
Look, of course, but you can't look at things on a static basis. If we add more hospitals going forward, if we invest for growth going forward, hospitals take 3 to 4 years to build. If you do an acquisition, then always the idea of the acquisition is...
As things stand, Abhay, I know your bed capacity is going to around 9,400 beds, I think, by 2029, 2030. So we've got that on board. But as things stand, would the aspiration be that your return ratios improve by 300 to 400 basis points? Will that be fair?
Absolutely.
Good to speak to you, Abhay. We have taken all your points on board, valid arguments as well that you've made, and the trajectory for the business, as you believe, moves forward. Thanks a lot for joining in and filling us in with all of that. We look forward to having a chat with you as the quarter does progress. Interesting one, Surabhi.
Absolutely. Well, on that note, we'll take a quick break. Come back on the other side and we will connect with Chirag Negandhi and Ankur Zaveri from JM Financial. Their conference is going to get underway. We'll get you some highlights.
Welcome back. Well, JM Financial India Exchange 2025 will kick off tomorrow. We're now joined by Chirag Negandhi, the MD of JM Financial, as well as JM Financial. We have with us Ankur Zaveri, the MD and CEO. Hi, Ankur, as well as Chirag. Good to have you all on the show and wishing you all the best for the conference that kickstarts. Well, let's come across to you, Chirag, first. How are you feeling about the markets, in terms of activity? There's a lot of supply that's coming in there. There is some bit of bullish sentiment as well that's creeping in. Second half of the year could be far better in terms of earnings, in terms of the entire economic setup. Give us your initial take.
Thanks for having us. On the markets, frankly, we're pretty confident. We feel good about the markets. The outlook, like you mentioned on the earnings, is getting more positive. FY27 is likely to be a good year, as most are expecting on the earnings side. And I think the next leg of the bull run will get carried forward only with this earnings growth. So I think the visibility of this earnings growth will start driving the markets from here. We remain very positive on the markets. We believe certain spaces in the market provide good opportunities, and we're hoping that our conference helps with giving that window to the investors to come in, explore, and meet with companies up front and understand where they can find these pockets of opportunity.
Chirag, though you're sounding quite bullish and you all have been quite optimistic on the markets, and hopefully, there'll be a lot of interactions between large investors as well as the corporates out there. But one worry is the kind of supply of paper that we're seeing. Yes, the last few listings actually have done quite well. We have another one that's listed today, and it looks quite well. But what about this supply of paper? Barely earnings are over, and you have PEs, promoters coming to sell some stake, and all this talk of liquidity. Actually, that liquidity is getting absorbed in all these large trades. What do you make of that?
Yeah, no, look, the paper, I don't think it's a little unfair to just think of this as paper. I think one has to qualify this with the quality of paper as well. So good companies, strong earnings, or good visibility of earnings, platform economy companies, good managements will always have a market to come to, to go public. And I think that continues. It's not easy for everyone to come to market. The investors are being far more discerning in what they're supporting and what they're backing. And I don't think that stops in a rush. Like I said, good companies will find their investors and will continue to come to market. I'm not so worried that this supply or this whole scare of this supply is going to be the dampener on the markets. They will only come to market when the valuations are right for the public market investors. And I don't think that's a big dampener on the markets.
Speaking of a dampener, if you're feeling a little off with this 100-point slide on Nifty, let's pull up Nifty. Nifty is obviously at the morning low right now. If, traders are feeling a little bleak, you just have to glance around the region. There's a big slide underway across Asia right now. It is unraveling of the so-called AI trade. It's not any major unraveling. It's just nervousness, profit-taking, in all probability ahead of the NVIDIA numbers, which is a big event on Wednesday evening US time. So Nifty is looking the best in the region. Nikkei is down 3%. Kospi is down almost 3%. Hong Kong is down 1.5%. Mainland China is down about 0.5% as well. So, Prashant, I go back to my thought and the belief that we are the anti-AI trade, even if it is... And, there was some trickle of FPI buying in the cash market yesterday. I just want to be an optimist, and I'll leave it at that.
Absolutely, and I think we'll have to track this one. But yeah, for now, I think the market's kind of given up some of the gains, etc. Chirag and Ankur, thanks very much for joining us. Prashant here. Ankur, so talk to us a little bit about, the kind of conversations you expect out of the, of course, there will be company-specific questions, etc. But overall, right, across conferences and people that we've spoken with, people are constructive, but there's no great a great deal of excitement about how 26 perhaps is going to be this big year or anything of that sort. Even though 25 has not been all that great, at least at an index level. And people are just waiting whether growth will pick up, earnings growth, and maybe it will. So just your thoughts, Ankur, how you think about that question. The top 2 or 3 talking points of the conference as you see it.
Yeah, Prashant. So thank you very much. I think that, if you look at the broader space, and let's understand where the markets are today, right? I feel that the markets are in a broader trend of consolidation. If you think about from September 24, what we have been seeing is a very tight range in Nifty. And at every range, we've been seeing emergence of selling and buying both by domestics and foreign institutional investors. So my sense is that, if you consider from 2010, we've had such 3 phases of consolidation. All of the phases have, after the consolidation, we've seen, a market performing at least 30 to 40% higher from where the consolidation ended. If you think about, the current phase, I feel that the narrowing of consolidation itself means that there is an opportunity. We are trading at the higher end of the band. I feel that you are right that after FY26, the FY27 guidance as well as the earning uptake could be the key trigger for the investment cycle to again kick in, which means that we may be in the next range and probably also look at, the new ranges in the Nifty, which will come by. But it's very important that FY27, we don't miss out on earnings and we see that uptick on the earnings.
And that will depend in turn on overall growth picking up, right? I mean, I think nominal growth has to pick up in that sense. Chirag, at JM, what are you most excited about in terms of stuff which will do well on an absolute basis from here on?
So, Prashant, thanks. I won't go into specific stocks, but I'll tell you that we remain continuously bullish. Just the fact that we go from a 4 trillion economy to 8 trillion means that a lot of sectors will get the tailwind. And I think we are seeing this already starting to play out. You can start seeing trickles of this in consumption. We are seeing this in energy, whether renewable or transmission. You're seeing this with the growth of the data centers, the platform economy, like we call it. I think there are many, many pockets that will see the tailwinds of the kind of growth that India will see over the next 5 and 7 years. It doesn't bother us on a daily or a weekly basis how the markets are playing out. We want, most of our investors are coming into the conference trying to understand the next mega trends and look at, where they can actually invest long-term capital money that allows them to kind of get gains over sustained periods of time.
By the way, one more listing, right? And Super One, even though the market is down 120 points, Physics Wala has listed it with a pop of about, 34, 35%. We should have, I think that we had shots coming out from there. Oof. Yeah, so there you go. That's the team at Physics Wala, and some selfies being taken and general jubilation all around. 50% now. Wow, 50 rupees on top of the issue price. So 160 rupees on Physics Wala coming through. It's phenomenal.
This was one issue where the OFS portion was not large, too large. It was actually money coming into the company. The fresh issue was about 3,100 crores, and there was a smaller OFS portion. The company has been, it's still, I think, loss-making, but it's been reducing the degree of those losses. Market's given it a resounding thumbs up. Issue price was 109. The price on the ticker right now, 154. So looking very, very good with Physics Wala. Chirag and Ankur, great to be listening into you, and thank you for being with us this morning. Chirag, on that point of foreigners looking at something exciting in India, it's all very relative, right, when we're talking about FPI flows. Foreign investors need a reason to go away from a trade that's been working phenomenally well, very comfortably well, and that's the AI trade. Now, for whatever reason, whether it's faltering, whether there is profit taking, or you generally want to kind of, spread your eggs in other baskets as well, if that money comes to India, first of all, what's the sense? In the coming few, months, do you get a sense that we'll start getting in more sustained FPI flows? And if yes, where do you see that money going? Which parts of the market?
No, I have no doubts in my mind that the FPI flows will start coming back to India. I think they They look for rate of change. They look for growth. FY26 and FY25 for India in terms of earnings growth haven't been great years. We expect FY27 to be a solid mid-double-digit kind of growth numbers. And when you deliver those kind of, or the outlook of those kind of growth numbers, there is, you will see the crowding out that investors will, whether Indian or global, will have to, they don't have a choice but to come into growth markets. And the sectors, to me, will continue to be quite a few of the ones that I've been naming, whether it's the financials, whether it is, power transmission / renewables. They will come into consumption. That, to me, will be a big theme going forward in the next 18 months. We're seeing with the GST cut and the interest rate cuts, how that's beginning to trickle back in. So I think large places, I think there will be a few more IPOs that will look exciting. You all spoke about Physics Wala right now. What we are seeing incrementally on that side as well is that both promoters and investors are being far more sensible about the way they're pricing deals. Promoters are not worried about leaving a little more on the table just to make sure that deals open well and that the stock opens well, and that they have what they call long-term investors sticking with them for periods of time. If you talk to the private equity guys, you'll see the kind of money that is likely to flow into India, or the targets that they have for investing in India over the next 5 years, and those are just staggering numbers. I think we'll be surprised on the upside when we start seeing growth coming back in terms of how FPIs come back into India.
Certainly hope so. Chirag and Ankur, thank you very much. Have a good conference, guys. And we'll, of course, from the sidelines of the JM India conference, get more views, perspective as the conference gets underway. Thanks very much. Well, I think we've got, what, 100-point cut, 25,900. Take a quick commercial break here. So 2 listings, by the way. We focused on Physics Wala, but there's one more which is kind of listed at par with the IPO price, around the IPO price. Commodities in focus on the other side. Manisha will be joining in with that in just a bit. Stay tuned.
Welcome back. Let's straight away turn our attention to the commodity markets. Over to Manisha for the latest. Manisha.
Thank you so much for that. I'm looking at the soft commodities today. We haven't spoken about agriculture in a while, and that is because there is enough production. Inflation has been under control. But in the recent few weeks there, we are looking at strong demand coming into the markets. There are trade deals happening, buying happening. And then apart from that, the lower stock in the very immediate term seems to be supporting many of those agriculture commodity prices there. Take a look at the Baltic Dry Index. That's trading at a 7-week high, is telling you that there is that global trade back in the markets, and the higher freight prices seem to be rising as well. There is some bit of a backlog in the Black Sea as well, and that seems to be supporting many of these global markets there. Rapeseed prices are trading at a 15-week high as well. Edible oil as a sector has done quite well for this current year, 2025. When you look at the soybean prices, well, they are also trading at a 1-year highs. The last time you saw these kind of prices were in July 2024. Much of the support from soybean has come in on the back of US and China trade agreement, and China saying that it will continue to buy US soybeans that it had stopped buying in the last 1 year. So China has bought 7 cargoes from US for the December and Jan deliveries there. The USDA, in the meanwhile, also has trimmed the world production by 4.10 million tons to 421. So that lowering of global production and then China suddenly buying into the markets has been supportive. The USDA, that is the US Department of Agriculture, also has trimmed the global ending stock estimate to nearly 121.9 million tons. So everywhere that you look, you have supportive figures coming in on that. Not just edible oils, rubber prices also are trading at around 2-week highs, and this is on the back of rising auto demand from Brazil. China demand seems to be stagnating, but it is LATAM demand that is picking up. And then apart from that, there are supply constraints now coming in from Thailand because of the heavy rain there. That in turn also has been supportive. The other one on my radar is corn prices trading at a 5-month highs. Now, Brazil is turning a lot of corn instead of sugar into ethanol. So you have strong demand coming in from there. And then it also is about South Korean buyers buying very strong. Logistical delays, as I said, out of Black Sea region has been supportive. And then record US exports for the current year have taken the prices on the higher side. Take a look at wheat prices, and that's the last one on my list here. That one in the global markets is trading at a 4-month highs. The USDA has raised world production and ending stocks as well. So while that should be putting pressure on prices, but what is supporting is the aggressive buyer that we have seen in the very near term and the scarce prompt availability. So when you look at strong buying from much of Asian countries, North Africa has been quite supportive. Now let's talk about India, and the dynamics seem to be changing somewhat here. India's wheat output last year was a record 117.5 million tons. This time around, with the way Rabi sowing seems to be headed, we are looking at 119 million tons. So that's back-to-back record numbers coming in there. Last year's government procurement was the highest in last 4 years at around 30 million tons, with expectation that you could be looking at this number increasing yet again. Now, thing to watch out for is while the wheat exports have been suspended since 2022, but we do understand that there is conversation between Ministry of Agriculture and Commerce where wheat products perhaps could be exported to the tune of 1 million tons. That clearly is supportive for the FMCG companies in the Indian markets there.
All right, Manisha, thanks very much for that. It's agri-commodities in focus. Today, we take a quick commercial break here. On the other side, our special Indianomics segment, Lata, conversation with 4 banking veterans on the costs and benefits of the next round of PSU bank consolidation. Stay tuned, coming up.